Today we're going to take a look at a trading strategy using a simple moving average crossover on the Aussie 200 CFD. Now you'll notice the market is sitting at around 4,027, and over on the right hand side here we have an opportunity to view the chart on this particular index. So I just click on the show chart icon over here and it brings up the ability to see exactly what's gone on today. And keep in mind the market overnight on the American markets fell over 6%, and as a result our market has followed suit and the volatility has been quite extreme. So if I scan in a little closer here, and this is an hourly chart, you'll notice that over the last couple of days the market has been significantly down, and today's market has rallied significantly off its original lows. Now I might just move this over to a 5-minute chart. There we go, and move it over to the right here. And what you'll notice is I've actually got two moving averages already put on there, but I'll show you how to place a moving average on this particular chart. What we need to do is click on the settings button right here, and what you'll notice from the drop down menu here is we have an opportunity to put a number of different indicators on, all the most popular ones: RSI, stochastic, moving averages, Bollinger Bands, MACDs, but we're going to use two exponential moving averages. Now exponential moving averages are just the same as normal moving averages, except they place more emphasis on the most recent information. So we've applied two exponential moving averages. The first one is the red line, is a 5-period, and the second one is the green line, which is a 20-period moving average. So let me just remove that, because the strategy we'll look at today is entering based on the moving average crossover. Now this particular trading technique is excellent in trending markets. Now keep in mind markets only trend some 25 to 30% of the time, and this type of strategy is usually pretty terrible when the markets are range bound and trading sideways, such as just through here. You'll get a number of false signals to buy and sell accordingly. Now if we scroll over to the right, when we see some excessive volatility and usually some direction, we'll get to see some excellent trends in place, which give us an opportunity for this particular moving average crossover system to work quite well. Now all we're looking to do when we want to enter long, we look for the red line to be crossing up and through the green line, and that'll give us an entry signal. And when it crosses back down through the green line, the red line crossing back down, we can either close that long position or enter a short position. So as an example, through here you would have gone long just in this particular phase here, and shortly after you would have got out and you would have taken a little bit of a loss on that particular trade. If you had have entered short, perhaps trading in the most dominant direction through here, then you would have had an opportunity to enter short here and ride this particular trade all the way down until about this phase here, where those the two lines there were right on each other. In fact, you'll notice up on the left hand side, the exponential, the 5-period, did actually close below. So you would have closed the position there, locking in a nice profit, and potentially you would have entered short in order to then reverse that signal and then go long again through here. So you would have taken a loss through that little trade there, and then as the 5-period moving average crossed the 20-period, you would have entered a long position just through here, and you'll notice that's just over 3,800 points. Now this is a 5-minute chart, so this is just today's trading action, and you'll notice from 3,800 points over 4,000 points, 200 points in a day is quite significant. So this moving average system once again is excellent during trending periods. As you'll notice here, you could have entered a short position there and rode this all the way down until about this position here. So you would have been entering just under 4,000 and exiting around the 3,880, locking in some good profits. Once again, during sideways trending markets such as this, you get a number of signals to enter and then exit, and then you take a small loss. Enter, exit, small loss, enter, and a small win there of 40 points or so. But generally this particular strategy, moving averages, work best in trending markets, and they are not so good in range bound choppy markets. Now the good news is with our platform you're able to place alerts, so you can set a trigger when, as you see down here, the new trigger when the EMA 5, which is the 5-period moving average, the red line, rises above the 20-period moving average. So let me show you how to place that. You can say the 5 EMA greater than 20 EMA. That's the note that you write for yourself. And if we move down here, you'll notice that I've got selected the email ajessen@capitalcfds.com.au, and once triggered, reactivate after either send once, or you can do it after so many minutes or so many hours there. So we click on activate, and what that'll do is it'll notify me anytime the 5-period moving average crosses over that, and we might use one just to get on the other side as well. And this one's the 5-period EMA crossing below the 20 EMA, and once again we'll send the alert notification, tick the box that it will go to my email address that I'm using whilst at during the day, during the trading hours, click on activate, and now I've got those two alerts set up. So if the 5-period moving average pops back down and crosses below that, I'll get a signal via email, and then I'm able to go in and close that particular trade. So that's a good overview of how this particular moving average system works. Very, very simple, very effective in trending markets, but not so great during range-bound markets. So you do need to identify which of the markets that you're actually trading in there. Thanks a lot, and we'll look forward to talking with you soon.